Thank you, Vaibhav, for introducing me. So I'm clearly audible to you. Uh, okay. So thanks, Vaibhav, for introducing me, and thanks for giving me an opportunity to speak on the corporate tax. So I will start with the basic. Actually, our agenda for today is to give the overview of corporate tax introduced in UAE. So as you know that on 31st of January, there is a press release issued by the Ministry of Finance that is related to corporate tax in UAE. And on 28th of April, the public consultation document is out by the Ministry of Finance, which talk about the overview of corporate tax. And on 9th of December 2022, the corporate tax law is out. So we talk about the many things like P, source of income in UAE, transfer pricing. So we will touch each and every topic, but not in depth because our agenda is to give the overview of all the topics covered in the corporate tax. So I will start and share my screen with you. Whenever my screen is visible. So we will start with the taxable person. So
Recording in progress.
As per Article 11, so taxable person means the resident person and the non-resident person. So under the resident person, the juridical person and natural person will cover. Basically, juridical person means to any company, LLP like that, and for natural person means an individual. So for juridical person who are the resident in the UAE, who are incorporated or established in UAE, and free zone persons also include the juridical person. Another another entity who have a place of effective management in UAE that will also covered as a resident in UAE. So for poem analysis, we have to see many things. So it's very subjective to analyze whether any entity or foreign entity have a poem in UAE or not. So for a juridical person who are resident, then their worldwide income is taxable. Might be their income is double taxed because it's worldwide taxable. So accordingly, we have to claim the foreign tax credit as per the specific article. So if we talk about the natural person, like in most of the jurisdiction, there is a concept of number of days. If they exceed the number of days, then only they are resident. But in UAE, there is no concept of number of days. If as an individual you are conducting any business activity in UAE, then you become a resident as an individual. So for a resident as a natural person, your worldwide income is taxable, but your all income is not taxable. Income is taxable, which is related only to business or business activity. Till now, there is a no clarity which income will be covered under business or business activity. So we are still awaiting for the cabinet decision. So soon it will be announced, which will tell more about which income will be covered under business or business activity. So if we talk about a non-resident person, so non-resident person can be a juridical person or a natural person. So For non-resident person, their income is taxable in UAE if they have a permanent establishment in UAE as per Article 14. So basically, PE is very wide topic in itself. So like in PE, like if you open any branch in UAE, any foreign company open a branch in UAE, then it can be a PE, but we have to see other condition also, like they are preparing and auxiliary activities, whether they are covered under PA and or not. Otherwise, branch in most of the cases is a PE. So in present scenario, also many foreign companies have a branch in UAE that can be considered as a PE. And on the other hand, there is a concept of construction PE and service P also. If you're deputing your employees to UAE, so there are also some conditions to check whether due to secondment of employees in UAE, there is a existence of PE or not. So that another term is nexus. Nexus is also a very wide term. So till now there is no clarity in the law about the nexus. So we have to wait until there is a clarity on the nexus. So another is the state source income. So decree law in UAE very nicely explain the state source. Like I can explain through an example. Like if you are from foreign country selling any goods to UAE customer, then also your income will be considered as a source of income in UAE. Another example is if any foreign company is providing any service to UAE, then also it can be considered as a source income in UAE if the service are utilized or benefited in UAE. So we have to analyze whether it will be considered as a UAE source income or not. That is all about the resident person, non-resident person. So our next topic for discussion is the free zone person. So it is a very important topic from UAE perspective. If we talk about, like as you all know, for free zone persons, if they are earning as a qualified income, then there is a 0%. If they are earning any non-qualified income, then the tax rate is 9%. But another important issue is that if you are earning as a non-qualified income, then you will not get the slab benefit of 3,75,000 as per the present decree law. The wording is drafted like this, that you will not get the benefit of 3,75,000. For the other person who are not covered as a free zone person, for them up to 83,75,000 taxable income of 83,75, there is a no tax 0%. Amount of taxable income exceeding 3,75,000, there is a tax rate of 9%. So basically, you have to calculate your taxable income to know whether you are covered under the 0% or 9%. So if we talk about the public consultation document, which is announced by Ministry of Finance on 28th of April, that talks about the that if you opt as a free zone person, then the option is revocable. You cannot again opt as a non-free zone person. But in decree law, there is no clarity till now whether option is irrevocable or revocable. That we have to wait till there is any clarity. So basically, what is the qualified free zone person? Basically, qualified free zone person, you are eligible to take the benefit of 0%. But what's the meaning of qualified income? Still, there is no clarity what income will be covered under the qualified income. But simultaneously, you have to meet some conditions, like you have to prove that there is adequate substance. There should not be any shell entity. So might be, as you all know, for checking the substance, we have to see the ESR, Economic Substance Regulation, which already existing in the UAE. Might be according to ESR, you have to check the substance, but till now there is no so much clarity how you will check the substance. And as I already told you, the definition of qualified income is not yet specified by the cabinet decision. We have to wait till it's clarified. And another condition to take the benefit of qualified free zone person, you have to you have to comply with the transfer pricing rules and the maintain relevant transfer pricing documentation like local file, master file, CBCR. All the you have to be maintained, and you are not opted as a non-qualified free zone person. Then only you are eligible to take the benefit of 0%. Might be in the future, ministry will come with any other conditions also to take the benefit of qualified free zone person. Till now, five, four conditions are there to take the benefit of qualified free zone person. Now, if we talk about the free zone, all free zones nearby 50 of above 50, there are free zones in UAE. All will not be considered under the corporate tax. So government or Ministry of Finance will come with a list of free zones who can be covered as a qualified free zone person. So till now there is no list of the free zone who will be covered under the corporate tax. For that also we have to await. So which free zone will be covered to take the benefit of corporate tax as a 0%. So now we will take some scenario like if the main entity, like as you shown in as shown in the diagram, a company incorporated in UAE that is in mainland, they have a branch in free zone. So if we talk about the decree law, so it's saying that if the UAE entity have a branch in UAE, then they are considered as a same taxable person, because branch is an extension of HO. It's not a separate entity. Might be they will consider it as a single person and they have to file a single return. But on the other hand, there is a no clarity. Like if you talk about the practical aspects people are facing in Dubai, like in UAE, if mainland entity have a branch in UAE, branch in free zone, whether the branch is eligible to take the benefit of qualified free zone person. So till now there is no clarity, because as per law it is considered as a same taxable person. So we have to wait for the same. Might be they will give the benefit for the attributable part of the branch, which is the income which is earned by the branch as a free zone. Might be they will get a benefit of qualified free zone person, but till now there is no clarity in the law whether you will get the benefit of 0% or not. So on the other hand, we will take example of a foreign company who is incorporated in the foreign jurisdiction, and it will be considered as a non-resident from UAE perspective, that have a branch in free zone. So that will covered as a separate person, because uh, branch will be considered as a P in most of the cases. So the foreign company have to take the registration for branch in UAE. They have to pay the taxes. So if we talk about the why it will be considered as a not as a same taxable person, if you read the definition of free zone person, so it will include a branch of a non-resident person registered in a free zone. So that will be not be considered as a same taxable person, because it's a branch of foreign company. If it's a branch of UAE company, then it will be considered as a same taxable person. So for branch, you have to do all the compliances. You have to take the registration, you have to pay the taxes and all the things you have to see. So another important area is the tax group. So if there are many, you have many companies in UAE, then also you are eligible to form a tax group, but there are some conditions to form a tax group, like there should be a relation of parent and subsidiary. The parent subsidiary should be a resident of UAE as a juridical person. Otherwise, they are not eligible to form a tax group. So the parent company should hold a 95% or more share capital and own the voting rights, whether it's directly or indirectly. Then only they are eligible to form a tax group. And another condition is the parent and subsidiary should not be exempt person nor a qualified free zone person. So basically, exempt person, there is a definition of exempt person under decree law, which talk about the like government entity, qualified public benefit entity, government control entity. So there are list of entities who are covered under the exempt person. So we have to see whether entity are covered as exempt person or not. So for qualified free zone person, I already explained you that there are some condition. If they satisfy condition, then might be considered as a qualified free zone person. And the parent and subsidiary should follow the same financial year, and they should maintain their financial statement as per the using the same accounting standard with parent and subsidiary should follow. There should not be any difference in the accounting standard uh, if they want to form a tax group. So there are some benefits also to form a tax group, that you have to file a single return separate. You don't have to file a separate returns. And another benefit is, another loss you can say, that you will get a slab benefit of 3,75,000 only one time or as a one entity if you go with the tax group. So we have to analyze whether it's beneficial to form a tax group or not. And there is also a criteria to form a tax group. And if any subsidiary later on wants to form a part of tax group, then they have to file an application with the FTA. So there is a procedure. We will discuss in detail in the coming sessions on each and every topics. It's the our agenda is to give the overview only. So if we talk about the tax registration, so basically, if we talk about the tax registration, at present, most of the clients are receiving the mails. On the basis of that, you have to register with the FTA. Till now, everyone is not allowed to register. Only the assessors or the taxable person who are receiving the mails from the FTA, that are eligible to register. And the link they will share with the client, that is for specific client. Only the specific client can register with that link or the mail, not any other assessors are eligible. So soon, rest of the assessors or taxable person will also eligible to register. But FTA or Ministry of Finance already clarified, if you registered as a late or not within the due date, then also there is no penalty for late registration. So we have to wait till um, for rest of the taxable person to receive the mail from the FTA side to register. And all the taxable person are required to register. There is a no limit. If your taxable income is less than 3,75,000, then also you have to register with the FTA, and you should have to obtain a tax registration number. As in the awareness session conducted by Ministry of Finance, there is also announced by Ministry of Finance that the invitation on client basis, and there is no penalty. So till now, if we talk about the tax returns, so the corporate tax return is on the self-assessment basis. So you have to file your tax return within 9 months from the end of your first financial year. As you all know that the corporate tax is applicable on or after 1st June 23. So it's not from 1st June 23. It's applicable after 1st June 23, which is the financial year after 1st June 23. So in Dubai, most of the clients are following the January to December. So most of the clients fall under the January 24 to December 24. So they have to file their first corporate tax return within 9 months from the end of the 31st December 24. That is the 30th September 25. In decree also, there is a concept of transfer of losses. You can transfer your losses for one entity to another entity. But there are some conditions, like you should hold some 75% of shareholding. Then only you are eligible to transfer the losses. Otherwise, you are not eligible. And your losses before corporate tax is effective is you are not able to transfer. That you have to lapse, and that is the main thing. If you talk about the transfer of losses, the pictorial presentation will explain you what's the due date to file the tax returns to registered with the FTA. If we talk about the 1st January to 31st December, so the first tax period is 1st January 24 to 31st December 24, and the due date to file the return is 9 months, like that is 30th September as shown in the diagram. Now we will talk something about the transfer pricing. So basically, law is very nicely drafted if we talk about the transfer pricing. Like if any entity is following Jan to December, so their first financial is Jan 24 to December 24. So their opening balance sheet should be aligned with the arm's length principle. Suppose your first day of financial year is 1st January 24 and the last year closing is 31st January 23. So your closing become opening of your 24. 23 closing become your opening of 24. So your 23 closing balances which you have, which reflected the payables or receivables with the related parties, that also you should be arrive at the arm length price, because otherwise it will become the opening balance of 24. So that you have to see how you will do, whether we have to see only closing balance, whether we have to see all the debit credits of 23 to arrive at the ALP. That is not yet clarified by the Ministry of Finance, whether you will check only closing balance or you will check debit credit during the year also. And on the other hand, uh, there is a concept of general anti-abuse rules in the decree law, which talks about the like you are not eligible to form due to the restructuring of the business. You can do if there are commercial substance, if there is a genuine or substance you can prove to the FTA that we are doing restructuring for these reasons, then only you can do. Otherwise you are not able to do the restructuring, or like you want to move out from free zone to mainland, mainland to free zone. That's not possible. If there is commercial substance is there, then only it's possible. Otherwise it's not possible. And another important area, like decree law talks about the expenses, like entertainment expenses. So there is a deductibility of entertainment expenses up to 50%. So expenses are not allowed as 100%. So we have to check in detail that whether you are eligible for 100% or not. So it's depend on the nature of expenses. At present, it's very subjective. We cannot say which type of expenses will cover under entertainment, because the law is first time introduced in UAE, so we have to see the FTA cabinet decision or minister decision to get more clarity about the same. And in decree law, there is also a concept of limitation on interest. If you are paying any interest to bank or any other party or related party, then also there is a limit of 30% of a beta. So the same concept also lies in the other jurisdictions also. Like in India, there is a concept of 94B section is there, which talks about the 30% limit. The same provision in UAE also, which saying you are not allowed to take as expense more than 30%. So firstly, you have to calculate the EBITDA as shown in the diagram, that you have to reverse calculate the EBITDA, then you have to calculate the 30% amount. The As you shown in the diagram, the net expenditure is 4,000 and EBITDA is 7,000. So allowed expenditure is 30% of 7,000, that is 2,100, and the 1,900 is disallowed. Then you have to carry forward the same till the next 10 years you can carry forward. So in the coming years, you are eligible to claim the interest expenditure, that is at 1,900. That's the overview for the corporate tax. So Faber, we can take a Q&A session for the, if anybody have any question for the corporate tax. Yeah, Vaibhav, I will do the same. I will be active to answer the questions if anybody raised any question on the YouTube. And further, I want to add on a thing like this session is only covers the overview because there are many topics which need the detailed discussion. Like P is the most important topic, free zones is the most important topic. If you talk about the OECD pillar two, in which there is a tax rate of 15%, so each topic will need half an hour to at least to get the detailed discussion. So it's not possible to cover each and every session, each and every topic in this session. So this session is only to give the flavor to the people about the corporate tax, what's the tax rate, what's the taxable person. So in the coming days or in the coming months, we will introduce a separate session on each and every topic, which will give you a detail, which will give you a detailed idea about the most important uh, uh, areas which will impact the UAE corporate tax. So stay tuned with us also for the more sessions on corporate tax. Okay, thank you, Vaibhav. Thank you.
Record